Good morning, everybody. Welcome to the Morning Blast. It is Monday, the 1st of December. That's right, you heard me correctly. We are already in December, the final month of the year, the final leg. Join myself and Mr. Michael Brown, where, as usual, we will be giving a very candid takedown of what's been going on in markets as it's Monday, on Friday, and what's been going on over the weekend. And as it's Monday, not just a review of what's to look forward to today, but also what to look forward to for the week ahead. But before we crack on, I'll get the legals out the way. Nothing discussed on this podcast is trading or investment advice. Nothing is discussed on this is an endorsement or anything like that. If it were, we'd make it very clear. Also, this is recorded live. There's no editing. Therefore, expect expletives and rants and general tomfoolery. Michael, how are you?
Well, very good morning to you, Ryan. Good morning, everyone. I'm all right. I must admit, I slept absolutely terribly last night. It must have been excitement to get ready and run down the final stretch of 2025.
Exactly that. You know, any market manipulation stories on the back of Rachel Reeves, or as greening of manipulating the gilt markets?
Do you know what? We will get into this later on, I am absolutely sure. But there is one big area where these sort of market manipulation allegations relating to Rachel Reeves fall down, which is you're assuming she actually knows what the market is and how to manipulate it.
Well, what was the quote from the Treasury special advisors the other week?
What are gilt yield?
That's the one.
Yeah.
Well, look, the thing is, I say anything that can kind of bring forward her downfall is welcome, but when you've got
keep her in. Forever.
But when you've got Torsten Bell making threads on X like he did today, also, mate, just pay up. Just pay the $9.99 so you can post extended tweets.
Expense the $9.99 for God's sake.
Yeah, 30 tweets basically claiming that we've got it all wrong. The budget was actually pro-growth. Do me a favour. But anyway.
But also, sorry, just lastly on that one, Ryan. As you said, 30 tweets in a thread that the budget is pro-growth. How many measures in that budget did the OBR say actually improve growth?
None.
Quite.
None.
I would humbly suggest that his efforts may be focused in the wrong place.
Well, and also, not being funny, but also there, I think it's in the Times, some like a senior member of the cabinet basically leaking what was said when Torsten kind of rallied the troops when they were starting to put this budget together. And I think the quote was, Torsten is a very expletive-filled rant. We should get him on the show, maybe.
No, we shouldn't.
What is it? Fuck them all and fuck them some more, or something like that. And obviously, what I guess he's referring to is the productive taxpayer in the room. But yeah, we'll see. But anyway, we do apologise. We do rant about this a lot. But it's the UK economy, and we're both based in the UK, so suck it. So should we crack on? Shall I read an update from our good friend Clive?
Indeed, yes. Why not?
Cool. Right, so as usual, start the show with an update on price action and where the major levels are for the major markets from our good friend Clive Lambert of Futures Text, who last week I finally got my signed book. I won't tell you what he signed it and what note he put inside it, but it was quite offensive, but there we go.
I think I know what it was.
Trade in many US products was even thinner than usual on Friday due to an outage at the CME. Obviously, everyone knows about that unless you were living under a rock. The S&P was green on Friday with gains seen to 68, 63 and 75 cents. Looking good to retest the late October all-time high at 69.53 and 75 cents. Gains on this side of the pond saw the DAX up to 23,922, where we have now Fibonacci resistance at 23,955. Bund, the German 10-year bond, their bears there returned shy of resistance at 129.26 last week. Clive sticks with the bears, targeting 128.37. Cable, that fell shy of resistance at 132.84, posting a doji candle on Thursday and Friday. So just shows you not much action going there. Well, not much from start to the end of the day. The recovery in Bitcoin may have hit the buffers already. We're being offered overnight down 5% on Clive's platform at the time of pixels. Gold and silver both rallied on Friday, with silver to new all-time highs, now eyeing the obvious $60 level. Gold printed 42.92 overnight. Its all-time high on the continuation chart is 43.98. Brent and WTI, the oil benchmarks, are bid overnight, but there's a bundle of resistance levels just above in both of those. So it might be a doomed rally. We'll wait and see what happens there. Henry Hub, which is obviously US natural gas, aka the Widowmaker, rallied neatly on Friday, but it's hit resistance of 881 overnight and found some sellers. The natural gas on this side of the pond, the European benchmark, TTF, that gapped down again now at levels last seen for the front month in May 2024. That has now posted 10 red candles in a row, obviously daily candles, which is a very rare occurrence. In the carbon market, so EU carbon markets, they continue to head in other direction as the highs not seen since the start of the year when it fell to 84.55, which is or was a big Fibonacci level to boot. Ags, the agricultural markets are on a small offer overnight with soybeans falling shy of the Marubozu resistance, 1,143. Getting nervous then, weren't you? Nearly had a roundup from Clive without mentioning the Marubozu support or Marubozu resistance. Just because we did mention precious metals, we saw the usual people claiming that the CME outage
I know where you're going with this.
Claiming that the CME outage was all due to silver positioning and trying to protect market makers in silver. That's utter bollocks. I was very, very close to calling some people out that I've met personally, and I know that sometimes they talk bollocks for the sake of engagement and stuff, but I'm trying to be a better man these days and I'm not doing it. But take it from me, it's absolute bollocks. The CME would not shut down the entire exchange for whatever reason, because they're not going to protect market makers like that. And also to suggest the market makers were tied to the futures, it's just utterly ridiculous. Yeah, but enough said about that, because it just shows, again, I like episodes like this because people's mask really drops and they go a little bit too far, trying to claim they know a little bit too much, and the mask slips and you realise that they actually know fuck all. But yeah, that's it for me. What have you got for us, Michael?
No, well, actually, just to follow up on that, I fully agree with you. It does sort of show people's true colours nice and easily. And also, I mean, if that wasn't just bullshit anyway, I would also add that silver hit a record high as soon as the market reopened. So, clearly the conspiracy theorists have got that one very, very wrong indeed. As Clive rightly alluded to, trading conditions very, very thin indeed on Friday as a result of that outage at the CME. Just to put it into a bit of context, I went back and looked at trading volumes in the front S&P contract. We traded 406,000 contracts on Friday. To put that into a bit of context, the 15-day average before Thanksgiving, of course, was about 2 million contracts. And the amount of contracts we traded on the day after Thanksgiving last year was about 850,000. So we were looking at, half the volume that we saw on the quietest day of the year last year, effectively, which just puts into context how thin and wispy, like my barnet, and even worse actually after a haircut over the weekend, how thin conditions were as the week drew to a close last week. But both the S&P and the Nasdaq did manage to notch their best weekly gains since all the way back in May, which is why I think some of the concern over the little wobble we're seeing this morning is probably a little bit, if not a lot, overdone. Anyway, in terms of other catalysts on Friday and over the weekend, I may as well start with here in the UK, because why not at this point? One of the big stories that has actually broke on Friday, was the OBR. They did something that they've never done before, which was to issue publicly a breakdown of all the forecast rounds that they have provided to the Chancellor during the budget process. For those who are unfamiliar with this, the OBR actually produced 6 different forecast rounds to take account of various changes in the economy and, of course, the measures that the Chancellor is proposing to deliver in the budget. And then the 6th and final of those rounds is what they issue on budget day, or what they actually end up issuing early. The reason why this is important is because basically through the entirety of October and also the start of November, the Chancellor, Rachel Reeves, had been briefing the media that there was a 20 or 30 billion pound black hole. Of course, she also stood up and gave that emergency fiscal narrative reset press conference at the start of November that was widely seen as laying the groundwork for an income tax hike. And she then, of course, U-turned on that income tax hike a week later because of what she claimed were better forecasts from the OBR. Now, there are 2 issues with this, and both of them come back to the likelihood, and in fact it seems like a certainty, that the Chancellor has misled both the public and financial markets on the true state of the public finances here in the UK. The first issue is when she was running around briefing about this significant black hole, the OBR's pre-measures forecast at the time, which was issued at the end of October, actually pointed to a £4.2 billion surplus. So there was no hole. There was no black hole at all, no matter how big. Yes, £4.2 billion is not a particularly large amount of headroom, but it is still headroom, which is not what the impression that Rachel Reeves was giving publicly when she was pitch rolling for an income tax hike. The second issue with all of this is that when the U-turn took place and the Treasury were briefing to Bloomberg in particular, that this was as a result of better forecasts, which meant they didn't need to go down the income tax hike route, blah, blah, blah. Well, no forecast was actually issued in that period between Rachel Reeves giving that emergency press conference and the Treasury pulling a U-turn. So we've got two issues here. One is that the Chancellor has basically misled people and misled markets as to the true state of things. The second is that she's effectively trying to use the OBR to cover up what is blatantly a political move, which is we think breaking our manifesto pledges would be electoral suicide. So if Reeves did have any credibility left after the budget, I think it's now gone.
I think,
to be honest with you.
I think 2 points to note on this as well is one, it appears, judging by what I've read in the Times over the weekend, that it wasn't just Rachel Reeves and Keir Starmer pulling the wall over the markets.
They did it over their own cabinet.
Yeah,
as well.
Apparently it was only them that knew. It was only the two of them that knew what the OBR kind of was saying, and they were keeping it from the cabinet as well, and that's already causing some ruckuses in Downing Street. But also, I think it's fair. Hacked off to the senior people at the OBR because they've obviously seen straight away what's happened. They're obviously sitting there going, well, hang on, she's blaming our report and our report said nothing like this. We've already got a bit of a shitty name anyway, especially in the city by being really inaccurate. And they basically just stood up for themselves and said, well, hang on a second, we can prove exactly what we've said and when. You're talking bollocks. So I think you've seen, obviously Rachel Reeves going after the heads of the OBR straight away, but I think they've done the right thing here, and I think there has been calls for many years now that the OBR should be making their assessments public, pretty much straight away, instantly. So we should all be able to see what the politicians are making their decisions on. And I think this only goes a step further to making that a realistic possibility, because we need transparency, right? But everyone needs, and especially if politicians are being given, these secret numbers, you expect them to be honest about them. So, it's a complete, as you've alluded to, it's a complete clusterfuck. The problem is, do I think that Reeves will go? I would like to think she would, but then who would replace her? Genuinely a little bit fearful. It would be someone like Torsten Bell.
Well, yeah. And also the other thing on that is, and I fully agree with you, I think actually this is a really good move from the OBR, which they're well within their rights to do, essentially standing up for themselves and going, you're trying to spin a narrative that doesn't exist. The problem is the Treasury have reacted terribly to this, and they are basically saying you shouldn't have done this, these are private discussions, etc., etc. The big issue here, of course, looming over all of this, is that the head of the OBR, Richard Hughes, well, his head is on the chopping block anyway for that balls up that they made in releasing everything early, and if Reeves wasn't going to sack him for that, she definitely is now, because she hates the bloke.
Well, that's the thing. So who has the power to sack the head of the OBR?
The Chancellor.
Oh, good luck. Good luck.
So, Richard Hughes will be in the dole queue on Wednesday morning, I think.
We're all thinking of you, Rich. Free Hughes won.
Yeah, indeed. So that is a complete and utter shambles. It is going to rumble on, but as you say, Ryan, I'm not entirely convinced that it will actually result in any significant repercussions, sadly. Anyway, moving on from that, in terms of other bits and bobs of the week drew to a close, we did hear an update from the World Trade Organization. They said that goods trade growth appears to have slowed in the second half of the year following a surge in the first half. Well, thanks for that one, lads, because we had a load of tariff front running in the first half of the year, which now isn't happening. So rather stating the obvious there. Moving on from that, Bloomberg citing delegates, OPEC Plus have confirmed their plans to pause output hikes in the first quarter of next year. That is in line with the decision that they announced at the conclusion of the prior meeting. Moving over to the United States, we heard from President Trump on Saturday on Truth Social saying that Venezuela airspace should be considered closed. That was all he said on the matter until he was flying back to Washington, D.C. last night and was asked about this and said, well, don't read too much into it. So not entirely sure what's going on with that one, but tensions between the two countries continuing to simmer away.
You can't really announce a no-fly zone over an entire sovereign nation on Twitter or Truth Social. Well, I think he actually did it on Twitter on both. And then just go, yeah, only kidding.
Well, especially not when you've got the world's largest aircraft carrier parked right off the coast of that country as well. It is all a bit peculiar, but yeah, we'll see what happens with that one. We also heard from Trump talking about his pick for Fed chair. He said to journalists on Air Force One, "I know who I'm going to pick," but again, didn't actually tell anyone who that pick is going to be. According to Bloomberg sources reporting last week, of course, White House economic advisor Kevin Hassett is very much being seen as the front runner for that position.
I think well, when I last checked, it was about 60% on Polymarket as well.
Yeah.
And also Bank of America did, actually I'll repost it in a second, they did a little kind of spin up on, where he sits on certain policies and whatnot. So worth checking out.
On Trump's lap, probably. But also sticking with the world of central banking, we have heard from Bank of Japan Governor Ueda this morning. Quite an interesting speech. Ueda confirming that they will be weighing up the pros and cons of a rate hike at the December meeting. Money markets now discounting almost a 90% chance that the BOJ will deliver a hike before the year end. And of course, that has put a bit of a bid into the yen as a result. Moving away from that into a bit of corporate news. The Nikkei citing sources noting that Micron are going to be investing $9.6 billion into Japan in order to make AI memory chips. This was news out on Friday. Also, we have some news on the US consumer on Friday. Adobe noting that consumers spent £6.4 billion online on Thanksgiving and that they expect a record $11.7 billion to be spent on Black Friday. MasterCard have also released some spending data of their own, noting that retail spending on Black Friday rose by 4.1% year on year, and the e-commerce spending was up by about 10.5% year on year. So once again, that old adage of never betting against the US consumer ringing true. Moving on from that into the aviation space, Airbus, they had a bit of a wobble on Friday. They had to order an immediate software update for about 6,000 of their A320 jets. Apparently something called intense solar radiation, which I think means if the jet sits in the sun for a long time, could corrupt data critical to the functioning of flight controls. In any case, no, it doesn't. But apparently all you needed to do was plug an iPad into the plane, leave it for 2 hours, and it fixes it, which they have now done. So
I'm no marine biologist, but I'm glad they fixed it.
Well, yes, quite, because that doesn't sound good. But that is now largely resolved, the company say, as of this morning. And last, but by no means least, I'll end on some good news for the time being. Diageo, they have got a bit of an issue at the moment because a load of their workers are going on strike at the brewery in Belfast. However, a spokesperson for the company has confirmed there will be no disruption to the supply of either Guinness or Guinness Zero over the Christmas period as a result of this strike. So cheers to that, I guess.
Oh, yeah, absolutely. I will drink to that. Well, thank you for that, Mr. Michael Brown. So before we hand back to you to give us a look at today and the week ahead, let's read out some of the choice headlines from the overnight news roundup, courtesy of our good friend Zach Eisman and our Substack, which is, Ron Seal. It's called the Overnight News Roundup, so do go and check that out. Michael's covered a few bits of this already, so what else can I pick up on? American car buyers bulk at high prices. A Wall Street Journal article notes that shoppers are downsizing, buying used vehicles, taking on longer car loans and holding out for deals as American consumers have had it with high car prices. Japan's finance minister flags erratic FX moves. Japan's finance minister said on Sunday that recent erratic swings in foreign exchange market and rapid yen weakening are clearly not driven by fundamentals. This is the kind of language you kind of hear from them where they're kind of laying some groundwork for a bit of intervention. So one keep an eye on there. And we have had some, the whispers of sort of getting a bit louder from, sell side research and whatnot. What else? We've got China factory activity in the PMI edges up but remains in contraction. China's official factory PMI edged up on a stronger production and demand in November, but remained in contraction for an 8th straight month. The index rose to 49.2 in November compared to 49 in October, and undershooting the consensus of 49.3. As a reminder, this is official data, so pinch of salt needed. It potentially could be a little bit worse than that. Sticking with China, China's property sector shows mixed signals, with new home prices rose faster at pace in November, but prices in the secondary market declined further, in a sign that the crisis hit property sector is yet to bottom out. Russia, they're inching closer to the first 1 denominated sovereign bond sales, aiding China's push to raise global standing of its currency. Although I'm not sure Russia issuing a bond in your currency is going to raise its global standing that much, but what do I know? In crypto, China cracks down on the crypto markets. Hong Kong listed stocks with cryptocurrency related businesses tumbled on Monday after China's central bank vowed to crack down on virtual currencies and flagged concerns about stable coins. London data centre rules may tighten even further. A London government watchdog wants tougher rules on building data centres, warning that their power demands may impinge on the construction of new homes in the crowded capital. I'm not being funny, but why you would want to build a data center in the UK full stop is a bit beyond me, with the, especially when you've got the cost of power, but especially why build it in the capital? I'm not really sure about that. I'm sure our friend Tom talked cars. I know there are some stuff about, certain sovereignty, kind of sovereign protection over data where you can't pass data through to, say, other countries and whatnot. So potentially that's one of the reasons. I'm not sure.
The other one is that there are actually, and you're going to be very surprised I know this, but there are actually a lot of data centers in the Docklands already.
It did make me laugh, and this is an anecdotal story, but I remember I won't say what bank, but there was a bank. Well, there is a bank. Actually, I'm not sure if they still do it, but the bank's HQ was in Canary Wharf, and their disaster recovery site was in Islington. And I have it on very good authority that they basically relied on pretty much the same power supplies and stuff. So I wasn't really understanding, because I know this because I used to drink with a few of the IT guys. Its job was just to sit in that office all day, every day, and literally twiddle their thumbs in case something went wrong.
And put 50p in the meter.
Pretty much. But apparently they were very good at office golf. So read into that.
There we go.
What are we looking at as well? Taiwan targets 15% tariff rates. Taiwan is aiming for tariffs on its exports to the United States to be cut to 15% from what is now 20%, though helping training US workers is not among the conditions figuring in their trade talks. Indian rupee, that hits a record low, a fresh all-time low against the dollar, as traders said the Reserve Bank of India has stepped away from defending the currency. Indian PM Modi's government is set to introduce sweeping economic reforms in an upcoming parliament session as part of a plan to attract foreign investment and boost growth. Geopolitical news. US and Ukraine negotiators said Sunday's meeting on ending the war with Russia, which included talks on possible elections, land swaps and security guarantees, was productive, and the top US envoys will head to Moscow on Monday for further discussions. What else we got? India eyes Russian fighter jets during Putin visit. India plans to start discussions toward the purchase of Russian fighter jets and missile defense shields from Vladimir Putin. Obviously, if this goes ahead, expect Trump to be a very, very disgruntled by this. Sticking with US and defense, etc. Taiwan plans to buy its first weapons for a major air defense system announced less than 2 months ago, underscoring Taipei's urgency to get the program online as China escalates its military intimidation. And Israeli President Benjamin Netanyahu has officially requested a pardon in his corruption trial as an unusual move over an issue that has divided the country. And some equity names before I head back to you. Amazon and Google launched joint cloud services. They may introduce a jointly developed multi-cloud networking service on Sunday to meet growing demand for reliable connectivity at a time when even brief internet disruptions may cause outages. So I guess this means, rather than one kind of point of failure, you now have two that must go wrong for you to go down, which would be nice. Intel, they're pushing forward with AI semiconductor packaging at the Amkor Technologies factory in South Korea. Micron to invest $9.6 billion in Japan HBM plant. What else we've got? CME data center operator bolsters backup calling. The data center exports.
Talk about shutting the stable door after the horses bolted.
One of the world's largest derivatives said it bolstered its backup calling capacity after overheating sparked a catastrophic 10-hour outage that roiled markets on Friday. And before I head back to you, let's get one more. BYD, the Chinese car giant, will push a software update to almost 90,000 plug-in hybrid vehicles in China after the national regulator said manufacturing defects in battery packets pose safety risks. Kind of, if you're driving around on a massive lithium battery or batteries, hearing that they've got significant defects, probably not what you want, because I imagine you're pretty much driving around in potentially a bit of a bomb. But there we go. That's it from me. What else we got to look forward to today and this week?
Cool. Good stuff. Thank you, Ryan. Well, in terms of today, then, we have PMIs from the manufacturing sector for pretty much everywhere. We get final November data from the Eurozone in about 5 minutes' time. And then we get final data from the UK at the bottom of the hour, which will, of course, be followed by the November ISM manufacturing survey out of the States at 3 o'clock this afternoon. That index expected at 49, up from a prior 48.
I've got to say, we've just had the German manufacturing PMI, and that came in at 48.2. And it was expected at 48.4, so worse than...
Oh, what a shame.
Blah, blah, blah.
Besides those PMIs, though, there isn't especially much on the data docket today, although do, of course, just bear in mind that the FOMC are now in their pre-meeting blackout period. The next we will hear from them is at the conclusion of the 2-day policy meeting on the 10th of December. And actually, on that note, we are due to hear from Fed Chair Powell tomorrow, and Vice Chair for Supervision Bowman will be testifying a couple of times during the week. Neither of these two will make any comments on policy whatsoever. Powell, I think, is actually giving a eulogy, and Bowman is testifying about financial regulation. Of course, all the usual suspects again going, oh, Powell's speaking on Tuesday. It must be because he wants to shape rate expectations. It isn't, to be completely honest with you. Anyway, besides that, other things to focus on throughout the week. Tomorrow, we get the latest inflation data from the Eurozone. CPI expected at 2.1% in November, unchanged from where we saw it in October. Core also expected unchanged at 2.4%. Wednesday is services PMI day from pretty much everywhere. The US ISM services gauge, that's expected at 52, down from a prior 52.4. And we also get the ADP employment figures on Wednesday. That's expected to show 10,000 private sector jobs having been added last month compared to the 42,000 that were added in October. Do bear in mind, of course, that we will not be getting the November BLS jobs report this week. That has been postponed until the 16th of December due to the government shutdown, and will be released after the conclusion of the next FOMC meeting, which potentially means a little bit more weight will be placed on that ADP data. Into Thursday, we get retail sales and jobless claims data out of the States. And then on Friday, we get jobs data from Canada, although the BOC are pretty much done and dusted with their easing cycle at this point. We also get the core PCE data out of the United States, although this is for September, so it is very, very stale indeed. And we get preliminary consumer sentiment stats from the University of Michigan for December. That's it in terms of scheduled events. Of course, also participants will continue to pay close attention to incoming news flow, whether it be in terms of trade, tariffs, geopolitics, or even if we get some news on who Trump may be looking at for the Fed chair gig. But for the time being, at least, that is all from me.
And that is all from me. Michael, thank you as always. Top stuff. Listeners, thank you as always. Again, me and Michael really do appreciate you listening in and giving us your time. Hopefully we had some value and put a smile on your face. But yeah, up until, thank you, Cam, for the love. But obviously people listening to this on the podcast have no idea what I'm talking about, but thank you. He's in the live chat, put it that way. Also, actually, shout out to Cam at Institutional Fi. If you've got an interest in crypto but want to stay away from the shitty meme coins, etc., do check out Institutional Fi on X and Substack. Well worth you paying attention to what he's got to say. But again, sorry, that's it from me and Michael. See you all tomorrow. Keep it tight. Much love.